Welcome back, my students, to another class of Mo Money School, the school that teaches you everything that you should have learned in your regular school. The purpose of these videos is to help educate those who are on the path towards financial freedom. I'm your professor, Chris Mo, and for today's video, I'm going to go ahead and teach you how you can become a millionaire with little to no effort. You see, a lot of people think that it's really hard to become a millionaire. But with all this studying and learning, it's real easy to become a millionaire if you play your cards right and you go ahead and invest correctly. Now, for today's curriculum, what we have planned out is I'm going to go ahead and issue the problem. We're going to understand the concept of how to become a millionaire. And I'm going to go ahead and give you the solution on where to put your money so you can become a millionaire. So the problem, right? Everybody thinks it's real hard to become a millionaire. But the real problem is that a lot of people just don't know where to allocate their money. If people start investing today, and with the power of compound interest, you can be a millionaire. Which is why I tell people, the earlier you start investing for your retirement, investing into your future, the more money you will accumulate during that time. You see, the problem that a lot of people have, specifically the young generation, is we want to go ahead and live up to the American society, get the American dream, which is get our house, get our car, start a family, without really investing into our future, getting assets that make us more income. So what we go ahead and do is build a real big hole of debt, which we can never go out of. You cannot invest towards your future if you do not get rid of your debt. You have to get rid of your debt first before you start investing into your future. Which is why if you haven't seen my first video, I recommend you go ahead and take a look at that so you can define what a debt and an asset really are so you can start building up your asset portfolio. Another thing that people don't realize is that $1 today is actually worth more than $1 tomorrow, and that's just due to pure interest. A lot of people have regular bank accounts with checkings, or they have cash on hand. Cash is the worst thing that you can possibly have because your money isn't growing. If you have money just sitting in the bank, if you have, say, $5,000, $10,000 that are just sitting in a bank, not making more money for you, then you're doing something wrong. If you want to get the concept and invest for your future and have a really great life, you have to start investing. You have to start making your money work for you. So many times I always get the question, when is the best time to invest in the market? The best time to invest is today. If you start investing today, your dollar is worth more than it would be tomorrow because you lost all that opportunity of growth that you could have had if you started investing today. Now, another problem that people have is that they don't start thinking about investing, they don't start thinking about saving or making their money work for themselves until they reach the age of 30, 35, and by then, they feel like it's too late to go ahead and save for retirement. They think it's too late to go ahead and make their money work for themselves. It's not too late, it's never too late, but it is gonna be harder for you. The earlier you start investing towards your future, the more money you will have for yourself, the more time you will have for yourself for that future. Everybody wants to reach financial freedom. The only way we're gonna be able to reach financial freedom is if we have a big bucket of money that we can go ahead and live off of. Right now, a lot of people in the world are actually suffocating because they're outliving their savings. A lot of people were not smart enough to go ahead and start investing towards their future. It took them way too long to realize that if you're not making your money work for yourself and you're not putting your money correctly into certain vehicles, your money is never gonna grow and you're never gonna have enough money to retire. Which is why a lot of people to this day are still working past the age that they wish to retire. Another problem that I see on a regular basis is the fact that the middle class and the lower class, they have a really low income levels, but their expenses are ridiculously high. You see, in order for you to become successful, in order for you to gain financial freedom, you need to understand how to live below your means and gain your assets. That way you build a lot more income. You have to keep your expenses low, your income high, and invest everything else. But the problem that people have is that they have a low income and they have high expenses. They get a high mortgage that they can't afford. They have a high car payment. They have a lot of children without actually getting these assets or saving for their retirements. Sometimes all they really want to go ahead and do is just enjoy the weekend. But that weekend that you're going out with is going to cost you in the long run. People don't realize that whatever you're doing today, you're gonna go ahead and pay for in the future. So for all my students who wanna go ahead and reach financial freedom, the only way you're gonna get there is if you start investing into yourself today. Today has to be the day that you decide that I no longer want to be poor. I no longer want to live paycheck to paycheck. I wanna go ahead and be a millionaire, because that's the only way you're gonna be able to to be a millionaire. Being a millionaire is super easy. There's multiple ways to become a millionaire. There's so many ways in this world to make money, it's ridiculous. Money isn't even real. We just create it out of thin air. Anybody can create money. You can create money yourself right now. I can go outside and create money right now. But that money is only gonna multiply if I put it in the correct places to go ahead and make myself money babies. So now that I got you guys all hyped up about money, how I can be a millionaire, yes, you can be a millionaire. Doesn't matter how much money you make, you can go ahead and be a millionaire. Of course, you have to think about your expenses, but if you have a cool amount of money just sitting there, if you put it into the correct places, you can definitely make that money become $1 million. Now, before I teach you how you become a millionaire and where to put your money, I want you to go ahead and understand the concept that I'm gonna go ahead and teach you about. You see, from all the learning I've done over the years, I came to one understanding. The only way you're gonna be able to multiply your money, the only way you're gonna be able to become financially free is if you go ahead and start investing your money today. Your money is never gonna grow by itself. Now, before I get into this, I wanna go ahead and share with everybody that there's multiple ways to go ahead and invest your money. This is just one of the proven methods that I've listened to and heard of that's proven time and time again to work. It goes back all the way to the 1920s that this system works. So if you want to go ahead and become a millionaire with little to no effort, listen up. One of the ways to invest your money is through the stock market. A lot of people want to go ahead and start investing their money, but you need to understand how the market works before you start putting your money into it. The way the stock market kind of works is there's a group of stocks, a group of businesses that need to perform correctly in order to gain value and give their shareholders a piece of that. Now, I'm not going to go ahead and go into deep in regards of how the market works, but to keep it in very simple words, buying a stock basically means you buy a portion of the company. Now that you have that portion of that stock, you are now a shareholder, meaning you own a little bit of that company. And due to that company's performance, whether it did good and whether it did bad, is going to determine the value of that stock. It's also going to determine how much money you make. There's different ways to make money, whether it's the appreciation of that stock or that dividend that that company is actually giving out. At the end of the day, the only way you can make money is if that company actually performs. Now, a lot of you are probably familiar with the S&P 500. The S&P 500 is one of the biggest indexes in the US. It's a group of 500 companies that go ahead and determine and reflect the overall stock market. The way the 500 companies are picked out is through people who work on the S&P 500 company. Now, companies such as Dollar Tree, Ford Motors, PayPal, there's so many different companies from different sectors when it comes to the S&P 500. But what I want to go ahead and show you is that the S&P 500 time and time again has come to prove that when the market goes down, it always comes back up. You see, I'm a great believer in history. I believe that history repeats itself, and the stock market shows to prove that theory. You see, the stock market was started in about 1920. All the way until, say, 2019, there's been several events that have caused the market to go down. So at the same time that the market goes down, it always comes back up, which is why I tell people the best thing you can do when it comes to investing into the market is just write everything out. There's no way that anybody can go ahead and predict the future. Nobody can predict what the market is going to be able to do. I've been studying great investors, and they've all come to the same conclusion. There is no single person that can go ahead and predict the future of the market. If you start predicting the future of the market, you will lose money. And this is what I want to go ahead and show people with this chart, is that if you've invested since the 1920s, you're going to go through some ups and downs with the stock market. But if you would have just rode out the whole entire market, your money roughly would have earned you an 8% return, which is higher than what the most active traders get for their clients. Most active traders get returns of 3 to 5%, which when you think about inflation, really isn't much money. Another index that I want to go ahead and talk to you about is the Dow Jones. The Dow Jones consists of 30 blue chip companies that are really important to the US market. We're talking about Apple, we're talking about Home Depot, we're talking about Visa, we're talking about Microsoft. We're talking about a bunch of big companies that are valued in the billions. The same thing with the S&P 500. If you take a look at the chart, if you would have started investing when the Dow Jones got invented and you wrote it out all the way until today, on average, every single year you would have gotten a 7.75 return on your money, which is still higher than what most active traders are trying to do when they're trying to beat the market. So what I want you to understand from all of this is that if we look at history, history repeats itself. There's always going to be recessions and there's always going to be a comeback. Nobody can go ahead and predict the market. It's time, proven again, that nobody can see into the future. Nobody knows what tomorrow is going to be like. Heck, we might be lucky to even live for tomorrow. Another thing that I want you to go ahead and take out from this is that actively trading your money is a gamble. If you think you can outperform the market, you're wrong. Not even the best people can do it. There's only a 5 to 3% of people in the whole entire trading industry that can actually outperform the market. But we're talking about people that do this on a regular. They're doing it day in and day out. They've been doing it for over 40 years in experience. Majority of people, for the regular investor, the regular trader, the regular person that's running your mutual fund, he's gonna get you low returns. If you would have just invested into low cost index funds, you would have gotten a bigger yearly return on your money. Okay, so now you're probably wondering, okay, I get it. I know how the stock market works. I know there's a pool of companies that need to go ahead and do good, and if they do bad, then I lose money. Where can I go ahead and put my money so it can actually grow? Look, Warren Buffett has 2 rules. Rule number 1, never lose money. Rule number 2 is listening to rule number 1. The purpose of you growing your money is so that you can go ahead and have money. What a lot of industries in the investing world are doing is they're charging you ridiculous amount of fees for managing your portfolio. You see, a lot of people are blindsided. They're unaware of what the stock market consists, what actual terms in regards to financing actually mean, and they're stuck in this bubble and they put their money into somebody else's hands. The first thing you want to go ahead and take into account is, where's your money going? What are they charging me to go ahead and put this money? You can't just go ahead and invest into single stocks. Investing your money into single stock is very risky because you're putting all your eggs into one basket. I'm sure a lot of you have pretty much heard that term where it says don't put your eggs in one basket. And the reason why they say this is because if you put your eggs into one basket, you're risking all your money that company is going to perform well. If that company does bad, then all your money can be lost. When it comes to the stock market, it can become a gamble if you're picking and choosing the companies and you're picking and choosing the time that you get into these companies. Like I said before, nobody can predict the market. So how can we make it possible for you to not take on too much risk but gain that high reward? What I've came to the conclusion, what I've came across is one of the methods that a lot of people use, and which is one of the methods that I go ahead and use, is passive investing through low-cost index funds. You see, a low-cost index fund is a pool of stocks that are managed by a group of investors. Depending on their beliefs, purpose of that index is what determines what is inside that index. So to make it into simpler forms, an index fund is a group of stocks that are managed by a group of investors in a certain sector, whether it be technology, agriculture, or anything else, and they put certain companies that are going to go ahead and be diversified so they can reflect the current market. That way, when some companies do well and some companies do bad, it actually balances out, which will give you a better return. On top of that, some of these companies actually do index funds for bond markets as well. For those of you that don't know what a bond is just money borrowed to somebody that's going to be repaid with certain interest. Now, the benefits of a low-cost index fund is that it's low maintenance, it's low cost, and it's low risk. You see, by putting your money into a group of stocks, you're not putting all of your eggs into one basket. You're actually stretching out your risk, and with the market changing, you get a certain percentage back. There's several brokers that go ahead and offer low-cost index funds. In regards of where you go ahead and put your money, that's really on you. But I would go ahead and suggest to look out for low-cost index funds. So the benefits of low-cost index funds, one of them being that it's low maintenance, meaning that you don't have to go ahead and pick and choose your stocks every so often. You're just writing it out. If anything, majority of people who have a portfolio of just low-cost index funds, they review their portfolios once, maybe twice, or even 4 times a year, instead of actually trading your money every single month. If you do that consistently, it's proven time and time again that you would get a lower return. It's also low cost. If you were to buy just one stock, let's say Apple stock, that costs about, say, $200, majority of people don't have millions of dollars. They probably have $5,000, $10,000. If you go ahead and just buy Apple stock, you won't have enough money to diversify your portfolio. By buying into a low-cost index fund, you're able to buy into a whole group of companies that include Apple and that include several other companies at a very cheap price. That way you can diversify your portfolio, which gives you that other benefit of low risk. Many of your investors and many of your brokers don't want to go ahead and offer you a low-cost index fund because they can't really charge that many fees. The way financial planners make money is through fees. You see, when they don't offer low-cost index funds, they're going to charge you for maintaining your portfolios, for trading every single day, and by doing that, it eats up on your annual returns. So by investing into a low-cost index funds, you avoid high fees as well, and you gain more money on the long run. I've mentioned before that I'm a passive investor. What this means is that I go based on history, and I'm putting the same amount of money every single month and every single week of the year. What I go ahead and follow is the dollar cost average method. Now this method, to put it into simple words, what it means is that every single paycheck, every single month, every single week that you get paid, you're putting in the same amount of money into your portfolio regardless of the performance of the stock market. Whether it's high or low, you're always constantly buying stocks at no matter what price. Because if we go back at history, it's always gonna bounce up. And if you just ride out with time, your investments will gain more interest, in the contrary of you picking and choosing the time you were to get into the investments. By following this method, you avoid the time that it takes to go ahead and pick a stock. You avoid the time that it takes to determine whether a company is good or not. And you're getting into the habit of building up your assets and building up more money as you live on. But like I mentioned before, you can go ahead and become a millionaire by literally not doing anything. If you just save a certain percentage of your paycheck for your investments, invest into low-cost index funds, you will get a certain percentage back, anywhere between 7 to 10%, and your money will grow due to compound interest. It's really not that hard. This is how the average investor and how the rich actually make their money. Now, many of you guys are wondering, how much money do I have to go ahead and put in to become a millionaire? And it really depends. Everybody's situation when it comes to their money varies. Everybody has a different income and everybody has different expenses. And also, everybody has different needs and wants. But in a hypothetical situation, with a simple $500 a month investments, these are the different types of returns and the amount of time that if you wait, how much money you would get back on that investment. You see, with a 3% return, after 10 years, you'll be making $70,000. If you wait a little longer, all the way to 40 years, with just a 3% return, your money would have accumulated up to $464,000. And that's with the smallest return possible. If we want to go ahead and start thinking like millionaires, then we want to go ahead and invest into low-cost index funds, or we can go ahead and build a portfolio that gives us an average of 7% a year to give us a portfolio of $87,000. Or if we really want to become millionaires, we let that money sit there forever and continue putting $500 a month away for our retirement. By the end of 40 years, we'll have $1,320,000 ready to us to use. Or if you get one of the best returns possible, which is a 10% return on your money, after 40 years, you'll have $3 million. You see, it's not that hard to become a millionaire. All you gotta do is put your money to work correctly. Now, obviously, this isn't including tax shit, but there's different vehicles that go ahead and defer your taxes as well. So it can also be possible for you guys to get that $1 million tax free. It's this simple. I wish it wasn't as simple, but it really is. People are just blind and unaware of the fact that if you start investing your money today into low cost index or just investing in general into the market, and you become patient and you continue putting in the $500 without ever touching it, your money will grow. That way, you won't suffer like a lot of people to this day. A lot of people are outliving their savings. With the $1 million, you'll be set, which is why it's always ideal. And a lot of people always tell me, and I tell everybody else, if you start investing today, say at 25 years old, by the time you become 65, you will be a millionaire by just putting $500 a month. Obviously, like I said, I can't predict the future in regards of low cost index funds, but if we go over 100 years, it's proven time and time again, if you invest into low cost index fund with an average of just 7% return, even a 5% return, you're close to being a millionaire. So besides that, that's pretty much it for today's class. I hope this opened your eyes up and made you see that by just saving a portion of your income and investing it into the stock market, you can become a millionaire with little to no effort. All you do is get $500, put it into a low-cost index fund, every single month put the same amount of money and just maintain it maybe 1 or 2 times a year and paying attention to the economy as a whole, you will become a millionaire. It's not that hard. So besides that class, I hope this really opened up your eyes. I hope you now see the fact that life is real easy. We can all become a millionaire if we play our cards right. So if you guys like this video, go ahead and smash the like button, comment below, and if you haven't already enrolled into my class, go ahead and subscribe to this channel because we're gonna go ahead and be talking more about money, and this is only gonna get better. I'm gonna go ahead and teach you everything that the school should have taught you. It's not that hard. The financial industry has kept us blind. It's time to change all that. It's time to close that wage gap so everybody can be freely happy. And if you guys want to go ahead and see more of me, go ahead and follow me on my Instagram, follow me on my Twitter, riseandgrind.mo. I also have another blog called Chris Mo's Journey, which I just go ahead and document my life in case you want little updates on that. And if you guys found this real valuable, go ahead and share it to your friends, share it to your family. Let everybody else know that we can all be rich. We can all live that financial freedom life that we all deserve.